Wallstreetbets has been in the news lately for bankrupting hedge funds, destroying Citron, and even getting shoutouts from billionaires like Elon Musk himself. Now, how could a subreddit of a bunch of retail traders cause so much havoc? Well, you guessed it, it all starts with GameStop. Now, you all know GameStop for turning in 52 games to PlayStations and an Xbox, and them giving you $50 back in return. But little did you know it would start a revolution with retail traders against hedge funds. Just a few months ago, GameStop was one of the most shorted stocks in the market. It was hovering around $2 and nobody believed in the company due to most video games going digital. And when I say short, I mean that people were betting GameStop stock will continue to decrease in price. And they do this by borrowing shares to sell in hopes of buying them back at a cheaper price, profiting off the difference. So for example, if GameStop was at $2 and you shorted it, you would look to buy it back at $1 and profit the difference of $1 per share. Now, Wallstreetbets is known for people putting ungodly amounts of money into super risky plays in order to hit a once-in-a-lifetime banger. Now, this is the earliest screenshot I could find where they started with $100,000 into GameStop calls and shares back in 2019. But from multiple sources, they say he started with almost $50,000. Now on January 27th, the day that I'm filming this user is almost at $50 million worth of GameStop. Now the hype that this Reddit has created for GameStop has made the stock price go from $3 in August to over $380 yesterday. Now this was mainly done through a process called a short squeeze. Now what a short squeeze is, if you remember when we talked about shorts, is that when these short sellers see a huge surge in price, they want to cut their losses, and when they cut their losses, they actually have to buy the stock back since they never actually owned it in the first place. And when you buy the stock back, it's just like a normal buy, and it causes the price to continue to inflate. Now the users on Wallstreetbets all bought GameStop stock, which caused the price to surge high, which also caused the short sellers to cover their shorts or buy the shares back. This in turn made the stock price go exponentially higher, and the hype continued over weeks. So GameStop price surged. This caused more people, including hedge funds and banks, to short the stock even more because they did not believe the fundamental analysis lined up with the stock price. Now this would cause multiple short squeezes because every time the stock kept going up, these big hedge funds would continue to short it. Now most of the chaos started when Citron Research posted this on Twitter. Now Citron is known for being bearish when it comes to most stocks, and they are an online investment newsletter, and they've notably been wrong about many stocks like Lemonade or Neo. This tweet set a fire under Wallstreetbets users. They decided to pour more money into GameStop, even throwing hundreds of thousands of dollars into positions. They believe that Citron announcing this would bring more short sellers, and in fact cause a greater short squeeze. Now they were correct because on that same day, GameStop's stock price nearly doubled from $20 all the way up to a high near $40. Now the real media coverage started when Melvin Capital, a known short seller of GME, announced that they lost 30% of their portfolio due to the GME short squeeze. Now, they've also been getting absolutely clowned on Twitter and within the Wallstreetbets Reddit forum because they believe they got bailed out because two investors, Steve Cohen and Ken Griffin, just invested $2.75 billion into the firm. Now, the media is considering this to be an all-out war with retail investors versus hedge funds. Billionaire Chamath Palihapitiya had this to say about the fiasco.
You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wallstreetbets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes. Their parents lost their jobs. And they've always wondered, like, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family?
Now, Chamath actually participated in this madness, announcing yesterday that he bought $115 strike calls for GameStop. Now, if you follow Chamath on Twitter, he seems like a very nice guy. He's all for climate change. A lot of his SPACs have to do with clean energy and climate change. And he's also running for California governor, and he promotes $70,000 a year for teachers. And he also wants 0% state income tax for California. So he seems like a very for the people type of guy. Now, Chamath talks about in that clip that he believes this is almost revenge because if you think about it, Wall Street does not care about the retail investors. And back in 2008, the big banks and hedge funds all got bailed out, while the people who had retirement funds in the market did not. And if you're in the day trading / investing scene, which I'm guessing most of you are if you're watching this video, you know that a lot of people believe that retail investors do not affect the markets and it's all about the big banks and funds. But this has clearly proved them wrong, as we've seen multiple stocks surge hundreds of percent due to retail investing. And I did not clickbait you in the beginning when I said this is a revolution. This is Wall Street versus Wallstreetbets. Retail investors are sick of obeying Wall Street, and to have supporters like Chamath and Elon Musk behind them, it gives them all the more confidence. Now, there has been some controversial statements by the SEC talking about how they are monitoring social media platforms for traffic with GME or AMC or a few other stocks that have been memeing lately. And this has started a lot of controversy because all the retail traders talk about how banks and firms also manipulate the market by price upgrades, price downgrades, and other things in that nature. I've been browsing through Wallstreetbets a lot. It's kind of something that I've been watching for a few months now because I think it's hilarious. The guys are really funny on there. And I think that they either want to make Melvin Capital go bankrupt, which I think is very unlikely to happen, unfortunately, or they want GameStop to 1,000. Now, I've seen some sources that have said that GameStop's short interest is actually still above 100%, which is insane, especially since of the recent explosion. Now, I've seen some sources saying that GameStop's short is still above 100%, which I think is insane because of all the recent explosions happening with the stock price. Now, that being said, I don't know if it can get to 1,000, but honestly, I do think it has a chance because the subreddit is getting bigger and bigger every single day. People really want to see that user hit $100 million. And I think with everybody still holding a lot of GameStop and a lot of shorts still being in the stock, I think it can pump up even higher than it is right now. Now, let me know what you guys think in the comments. Who's going to win, Wallstreetbets or Wall Street? I think no matter what, Wallstreetbets has definitely opened the eyes to hedge funds and firms' risk management models. I think they're going to need to adjust that after this one, especially Melvin Capital and probably Citron Research. But other than that, guys, I am out. I'll see you in the next video.